Good day everyone, this is Patrick from EasyFX Code Trading System, and it is Saturday the 19th of June 2021, and this is the weekly technical analysis for spot gold and dollar yen for the 4th week of June. And as most of you should already haven't heard, that the US dollar has strengthened and shot up very aggressively, and as such the other major pairs have fallen, including the spot gold. Let's take a look at spot gold here, and for the week it has actually fallen over 1100 pips here and fallen from the 50 pip retracement that I have here down to the 21.4 pip retracement. If we just take a look at the time frame here, this is from a if we take a look at the weekly time frame, this starts from the high, all-time high at 2075. That was in last year, 2020, and down to the lows of this year so far. And that's the retracement back up to almost 62 fib, and then it's now fallen back down to the 21 fib retracement. This move from the lows of this year. All right, let's go back to the daily time frame. So now we've got to update some of the zones here. This is now resistance. Yeah, the trigger was from the FOMC, the Federal Reserve, on Wednesday afternoon in the US, and early Thursday morning in Asia. This was the move that started on the Wednesday from the monthly pivot, fell to the daily 200 EMA, and just beyond that slightly after pullback on Thursday, it fell further, almost reaching the 21 fib retracement already. But then on Friday, it was a bigger pullback, almost back up to the 1800 level before it fell back down and finally hit the 21 fib retracement. So this will now be the support zone. So this is at the 1762 area, and the 1800 is going to be resistance zone. And above that, we can remove that for now. You'll need to climb back up through 1800 and the daily 200 before I can reach the 38 fib retracement again. So this is going to be the next key resistance here. All right, so we can update these also as well. Maybe we can delete this one here. Let's see. Yeah, let's take this out. This was it's now a resistance. Okay, so we just take a look at the weekly time frame. That's this fall from the 50 pip retracement down to the 21 pip retracement for the week. And with this bearish move, it's fallen through the weekly 55 EMA around 1790. That could be a slight pullback, so that could be an intermediate resistance before potentially falling a bit further. It could also target the 1750 and perhaps down these support areas. Let's go back to the daily time frame. So yes, I think 1750 should not present much of a support. So it could be between 1750 and 1700, so around 1725. That could be a potential intermediate support. And if it does sell off further, then it will target the round figure of 1700. But for now, let's probably identify intermediate level here. At the 1725 area. Okay, and that could be a potential intermediate support level. Okay, so we'll see next week what the new weekly pivot is going to be. Started falling from the monthly pivot, so that's a significant drop down here. Let's also take a look at the US dollar index, the DXY, and see the impact of the Federal Reserve statement. And basically, the Fed announced two major changes where they see potential rate increases, two rate increases in 2023, where previously they did not specify any. That's still a couple of years away, but it's a major change in their projection. And also updating higher inflation targets as well. So that's due to the improving economy. So with that, this was the breakthrough that we were potentially looking for, the breakthrough, the daily 55 EMA, right at the 138 fib extension. That's the Wednesday, by the end of Wednesday, and back up to this intermediate resistance zone. And then the follow through on Thursday, right past the daily 200 EMA, and then the follow through on Friday down up to the 78.6 retracement level of a short-term fib. So I think we can also update the fibs here. So this could be a new support level just below the daily 200. Let's take a look at the weekly time frame and see this swing move down, we can actually extend it to the lows. And let's find the retracement. Right, so that retracement hit the 50 pip retracement, fell back, and found support around the 90, didn't hit the swing low. And now it's coming up to the 38 pip retracement, right near the weekly 55 EMA. So it's trying to target that area. Then on this smaller fib retracement as well, we can also move this here, and that will align to a 78.6 retracement right at the weekly 55 EMA as well. So either one, we can do that. Then let's take away the longer term and let's use the shorter term one. Okay, so we can either use this swing move up, or we can also use this retracement. It's trying to target the, let's see, 92.60 area. Maybe use this fib, and it's around the 92.50s, which will align with the weekly 55 EMA. So let's use this for now. And let's move this resistance zone down here to the 78.6 fib retracement. All right, then we'll leave this intermediate support down here at the 50 fib retracement, right near this previous swing high. Okay, so you can see that the dollar has definitely blasted through all the key resistance zones, and now it's back above the daily 200 EMA. So this is going to be a strong support zone, right at the 62 fib retracement and the daily 200 EMA. All right. Let's move back to spot gold. So with that very bullish move from the US dollar, so all the other major pairs have fallen and fallen hard, and especially spot gold selling off positions. So we'll see if it's able to reach 1725, find some support, and try to stabilize and likely consolidate. Could dip down to 1750 first. Could dip down to 1750 for some consolidation. But yeah, watch out for some 1800. That's going to be the strong resistance zone. So this coming week, there's some minor news. Fed Chair Powell is giving his testimony on Tuesday, and then around the world, there's all the flash manufacturing and services PMIs. US final GDP is coming up, and then some consumer sentiment, as well as the PCE price index, which the Fed uses to track their inflation rates. So some medium impact news for next week, but watch out if it goes down to the 1725 region for support. That will be a critical one. Otherwise, if that breaks, then it will target 1700. Okay. Let's move on to dollar yen. And dollar yen, yes, there was a big move on the relatively big move on the Wednesday, but then it retraced the move all the way back into the 110. So now this is going to be support. So it's still within the channel, right back to the middle of the channel. And we'll identify this 111 as the key resistance zone. It did not follow through on Thursday and Friday to hit the upper channel trend line and the 111. So that turned around. And similar news, US news will impact the dollar yen as well for this coming week. But for now, it's back up above 110 and above the monthly pivot. So it could consolidate next week and could try to target the 111. But that's going to be a critical resistance zone. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week. And cheers for now.